Navigating the volatile seas of cryptocurrency. Insights from a finance expert and crypto trader. Cryptocurrency, the digital frontier of finance, has captured the imagination of investors worldwide. Since then, the cryptocurrency market has experienced exponential growth, attracting both seasoned traders and newcomers eager to capitalize on its potential. However, this rapid expansion has also been accompanied by inherent volatility, with prices soaring to unprecedented highs one moment and plummeting just as quickly the next. Navigating these volatile seas demands more than just luck. It requires insight, strategy, and a deep understanding of market dynamics. The cryptocurrency landscape is a complex ecosystem, characterized by a myriad of digital currencies, each with its unique features and value propositions. From the pioneering Bitcoin to the more recent innovations like Ethereum and Ripple, the market offers a diverse array of investment opportunities. Before investing in any cryptocurrency, it's crucial to conduct thorough research, assess its technology, utility, and market potential. One of the defining features of cryptocurrency is its volatility. Prices can soar to unprecedented heights one moment and plummet just as quickly the next. Risk management should be at the forefront of every trader's strategy. Setting stop-loss orders, diversifying your portfolio, and never investing more than you can afford to lose are fundamental principles to mitigate risk. In the realm of cryptocurrency trading, staying informed and conducting thorough market analysis are indispensable tools for success. Technical analysis involves studying price charts and identifying patterns to predict future price movements. As the cryptocurrency market continues to mature and evolve, adopting a disciplined and informed approach to trading will remain essential for investors seeking to capitalize on this digital frontier.